Hello and welcome to Advanced Charting Techniques. My name is James Boyd. When this class first kicked off, I used to teach this class every Friday, so it's great to be back with you. Cameron is well, he's probably in Scotland somewhere, probably hitting castle number 147. All right, a little fun there. We got Kevin with us also in the chat. Kevin and I did the ETF class this morning. That's a live session only. It was great to be with you, and it's great to see Kevin with a spirited discussion this morning. Now, we also welcome all of you. We got Joe with us, Jay Richardson, WW, Jack Wood, Ron, Sharon, and many others. And let's go ahead and jump right in. I see some of your questions. I want to get to those as soon as possible. Remember that Kevin and I, we do post educational content on X and also announcements. I will be out next week. I'm going towards where Scott is. Scott is in Maui. I'm going to go to Oahu. So, man, I got so many things to do before I leave. It's unbelievable. Anyway, Jack, the guard dog, will be here, and he'll be watched. And we're not taking Jack, so he'll be with us in spirit. Now, just real quick as we get started here, yeah, we're going over there because my son's getting married. So, kind of like a big fat Greek wedding, but it's American style. So that's the plan. Now, remember that the material that we talk about here today is done for general informational purposes only. When we talk about options, remember that options carry a high level of risk and are not suitable for all investors. When we talk about, let's say, our examples here today, which we're going to look at some for sure, remember that we're going to be using the Paper Money software application, and we use that for educational purposes only. Also, remember when we talk about examples, investing involves risk. When we say investing, it could be something just a couple days, couple weeks, couple months. We're talking about investing capital. That's what we mean by that. Okay. Now, I want to kind of talk about today really some movement that we're seeing. I want to focus on the MACD. Okay. And I want to kind of talk about how some investors use the MACD to gauge momentum, but also some new entry signals that could be a bounce, two, up near resistance, and something that kind of might be a rebirth of something where we're coming out of a flag and bursting back to the upside. We've seen a lot of this lately, but I think it's so easy to overlook if you don't know what you're looking for. Now, just real quick, before we actually hop right in, here we are at the end of the month. We're month 5 into 2026. Let's take a quick inventory as far as where the markets are. I mean, especially if you're looking at the scoreboard, right? Well, if you look at, let's say, the NASDAQ, we're going to look at the 1 month return. We're going to look at the year-to-date return. What's interesting to kind of note right here, the year-to-date is 20, and 60% of that year-to-date return came in the month of May. This is like a baseball game. You don't know, for example, which, inning you're going to knock the home runs or get the runs batted in, etc. That's why you show up to each month, okay? Now, you're also going to see that 60% of the return of the year-to-date return of the SPX was in the month of May. This is why you got to be careful when they talk about sell in May, go away. Well, if you sold in May, go away, that was actually 60% of the year-to-date return so far. RUT was 6 out of 16, 3.7 out of 5.4. So a big push for the year-to-date returns came in the month of May. Now, remember, there's 4 charts that we've been really watching, which have been really good independent variables as far as kind of seeing what is the sentiment of the market. First is actually crude oil, okay? Now, remember, if this chart is actually going down, and we talked about this earlier this morning, when we've had some negative news about what's happened abroad, the price went up, yes, in the reaction, but then it faded. And what you're now going to notice is, as I say, these letters, MACD, M-A-C-D, the MACD that we're actually using is a 613.9 setting. The purpose of that is to be more sensitive to the price action, okay? A shorter number of days of duration. Now, if you take a look at this, what you're now going to notice is that MACD has just been bleeding down. When we look at the moving averages, okay, they're red. 2, when we look at the shading, red. When we look at actually the candles staying below the shorter term moving average, using as resistance. Remember, if crude oil is actually going down, we know that that's been a positive tailwind recently for markets. Markets, as we showed, kind of bullish. Real quick, I mean, here we are on Friday, okay? Oh my gosh, it's gotten worse, okay? Here we are, VIX at 15.28. How many of you have enjoyed this? Now, remember, when we said before, when the VIX is high, it's not necessarily a time to potentially hide for some investors. When the VIX is high, some people say, I'm looking to buy. Now, remember, this is a second of four that we've been talking about, but I want to kind of nail it again because we're at the end of the month. When we actually look at talk about crude oil, second actually VIX. Third, we're actually bringing up, and remember, the VIX is important because if the volatility is actually going down, that probably means trends are going what? Up. Okay? We'll talk about that in just a second, how that relates to the MACD. Now, if you look at the rates, we've actually seen rates being falling here. Now, remember, rates falling typically pushes up the present value of what those stocks could actually be worth. It's a mathematical equation. Okay? And the last but not least, if we said what else, the US dollar. We know that, for example, when you take a look at, let's say, things like large caps, Dow Jones related stocks, companies that are multinational selling their product abroad, their sales could be influenced by what the US dollar does and so on. Dollar actually kind of bent down a little bit, not necessarily breaking down drastically, but helping here. Things that I want us to watch, which we're going to look at here today, is keep an eye on gold, keep an eye on silver, keep an eye on copper. This is the second day in a row where mid-morning we saw some unusual price action. We'll pull up a couple of those charts in just a moment, okay? Now, just real quick, when we take a look at this, I just want to pull up something before we look at our first example. When I pull up sectors just real quick, and someone asked upon the returns there, the month, we'll let those load. So the month returns, and this is ranked by 1 month percent, okay? Now, as this actually loads up, our first example that we're going to look at is we'll look at the Dow more in detail. The second one we're actually going to look at, and I'll slide this over so we can actually get to our first example. It just takes a little bit to load when I'm actually got two platforms up and running a YouTube live. I'll hold that there and we'll come right back. Now, the first example that we're going to look at is love, okay? Now, Kevin this morning, he talked about the transports, okay? And by the way, could transports be influenced by what crude oil does, okay? Sure, okay? Now, the example given, we had not talked about love as much. We talked about UAL. UAL, I haven't touched the lines we talked about. UAL tapped that resistance. So it's probably likely that some investors actually said, James, I hit the target. Now, I want you to notice something when you look at this that was unusual, okay? A lot, and I'm going to kind of use this as an example, okay? A lot of times people will say comments to me like, well, yeah, you know, I'm going to get in when it breaks resistance. Well, UAL broke resistance. Now, the biggest thing what's kind of interesting is the line that I have drawn down here, and I'm right there. I want you to notice something on this chart, and I want to tell you how we use this, okay? Do you notice anything unusual on the MACD? Now, in a way, you could kind of say the MACD broke resistance. In other words, the peaks in the MACD, well, when it went there, price-wise, that MACD ripped through the prior high. So that's true, okay? Now, that's going to be a focal point of what we talk about here today. Now, sometimes you can actually get where, let's say, this MACD goes to a brand new high and the price is up at resistance or barely broke resistance. This is when the investor says, look, if the momentum is shooting to the upside, the path at least resistance is likely going to be higher. Now, guaranteed? No. Probability it could be increasing. Now, I want to use this as a template to the LUV example, okay? Let's go there now, okay? So now we can pull this up. We're going to look at it right here. Now, if we were to draw this resistance, okay? Now, when we draw resistance, again, we're looking at bodies of candles, like there, like there. I'm going back the last 2-3 months, and I'm just going to circle these bodies of candles, okay? Now, whenever we get these bodies of candles, we're just going to say, look, if I now draw a horizontal line, where do I get the most touches? Do I get the most touches there? I get 2 touches there. I get really 2 touches there. If I really kind of, well, where do I get more candles? I'm probably getting more candles right around that 41.47 mark. Would you agree or disagree? Now, here's the thing. Someone has to be right. it might as well be you, right? Okay. Now, I'm not going to draw from there because I get two candles. We're going to take it from here where we get more touches. So if we said, where do we see that resistance level? You're going to see right around 41.45. Now, what's the point? Well, the point is that when you look at the MACD on the bottom, the MACD is at nearly the highest level that we've actually been in the last, what, 2, 3 months? So what's the point? Well, so the first point is that if the MACD is up at the highest point, the chances that it could actually make maybe another run might be increasing. Okay. Second thing I want us to kind of notice here, the MACD actually, when it's a light green bar, it's actually saying the momentum is building and above zero. When it's the dark green bar right there, the MACD is still above zero, but it's fallen from yesterday. Okay. Now, but when we take a look at this, what's kind of interesting is when we actually got the price closing above 41.35, green candle. Second candle was yesterday, still a green candle. And the third one today, still a green candle. So and actually that was yesterday. And this one right here, the 29th, still green candle. So does anyone notice anything unusual? Anything? Now, by the way, when you look at this, as we've actually gone down, there's the 28th, there's the 29th. The MACD is still not dropped down to zero below. It's holding the momentum. Now, wait, if you hold the momentum and you're above resistance, what's the chances it could go higher? Okay. Now, I'm going to kind of use this as an example. Okay. Now, first off, when you get a breakout, normally you get a red candle or two. We haven't seen any red candles. Why is that? Well, if there are sellers, buyers are stepping in to buy. If there is an absence of sellers and just buyers, they're saying, look, we're kind of holding our position. We're waiting for that next push up in the price. Okay. So I want you to watch number one. When the price breaks out, do you get red candles? If you don't get red candles, strong momentum. Okay. If you only get red candles of 1, 2, or 3 days and then a hold bounce again, still strong momentum. Okay. And when you look down on the bottom on the MACD, if we're staying above that zero and that MACD is the highest it has been in the last 2 to 3 months, do not just kind of think that's not telling you something. Okay. That momentum popped and it's pushed and it's knocked the price higher. If you make the high, the greatest chance is to make a higher low. Don't just push that back and say it's not telling me something. Okay. I think we misread it. Now, the biggest actually thing is if the investor said, James, I want to go back to this. Now, I don't want to make this class where it turns into, let's say, an option class or something like that. So I'm going to kind of use this first example as far as like just if I said, hey, LUV, LUV. And what I want to do is with this LUV is I'm just going to buy shares. Now, there's some advantages of buying shares, okay? One of those advantages would be, number one, is someone says, well, the advantage of buying shares is it's a dollar for dollar movement, meaning if the stock goes up $1 and we had 100 shares, the unrealized gain is $100. You go down $1 or down $100, unrealized loss. So someone that buys shares is really saying, look, I want something in this case that is kind of more like a dollar for dollar movement. Now, you can synthetically replicate that with a long call and a short put, but it has an expiration, okay? And there's no claim to the dividend. Now, the biggest actually thing is if we take this line, horizontal support, horizontal resistance, this channel width here is going to be right about, let's say, now, by the way, channels, hopefully in any of the things I've taught you, it's been that you should respect channels. Do not discriminate against channels. If you did not practice that UAL trade, you just watched another one blow through the resistance and the path of least resistance to go to the next level of resistance, and another example happened right in front of you again, okay? Now, this move is about $4.81, $4.81. Target-wise is going to be a potential target right around about 47.08. Now, you might say, James, that seems a little bit lower, okay? You might be thinking that's a little bit low compared to maybe where you might look at this on the chart. That on the chart might be in the ballpark about 49 and change. 49.45 limit day GTC. Now wait, is this a stock or an option position? It's a stock position, okay? We don't have any expiration. There's no strikes. It's a stock position. Buying 100 shares of stock, saying if it goes to that price or higher, sell it. Goes down to this price or lower, sell it. Did you hear what I said? This price or lower. That stop is a market order. It could trigger and fill at a lower price level, okay? Now, what I'm going to do is initially, I'm going to take kind of the midsection of this channel, maybe about $40. And what I'm going to do there is I'm going to say, look, initially, I'm going to take the stop less $40.14 less, let's say 3%, okay? Now, 40.14 less 3%, it's going to give us 38.93. Now, I see the comments on software. We're going to come to Microsoft next, okay? So I do see that. Now, 38.93. So I'm going to type that in. Now, the things that are kind of standing out to us are, number one is kind of that basing pattern reversal. If crude oil goes off lower, could it help the airlines? Number two, price actually breaking resistance 4 days in a row, no red candles. That's unusual. Second thing actually on this, when we talk about the MACD, MACD is still staying up high, barely coming off the high, okay? Now, I'm going to just use example given 100 shares. Now, the paper money account, 338. Could we buy 100 shares? Yeah, we could go up to a $5,000 capital investment. I'm just going to leave it 100. It's going to be pretty close to what the cap is anyway as far as the invested amount. Confirm and send, there it is. We talked about the stop and what the risk is there. We already made mention of that. We're going to now send the order, okay? And now we actually see that right there. Texan, welcome. Okay, now I want to go back to just real quick before we look at, there's a question on the software. Kevin this morning talked about kind of software. He talked also about, what else did he talk about? He talked about, we did not make mention of cybersecurity, but I think we have to bring that up. The other thing that Kevin brought up was cloud. So software, cloud, and we also probably have to bring up cybersecurity. Our focus right now will be a little bit more on software, okay? And the example we're going to talk about is Microsoft next, okay? And we're going to talk about it in terms of price reversal and, again, the MACD. That's the focus. Now, just real quick before we do this, when we actually look at this, and let me kind of show you this to you kind of widen out. When we look at the 1 month performance, okay, 1 month performance, and this is why every month is important, okay? The semiconductors, the stocks, 25% for the month. A third of the year to date, that's the year to date return. A third of it was actually in the month of May, okay? So hopefully you didn't go on the vacation on the month of May, a Viking cruise, and there was no internet or something like that. That would have been horrible, okay? Couldn't think of anything worse. Now, the technology sector, 65% of the year-to-date return came in the month of May. 60%, obviously, we already said that on the SPX. When we actually look at the transports, it's up a little bit, 4%. Healthcare actually 3.73 and so on. And the biggest loser of them all was utilities. Now, notice when the market goes to the upside, people typically don't want to just get something that doesn't. This really goes back to is that the utility space, the staple space, the healthcare non-biotech tend to have a slightly negative correlation to the S&P 500. People are playing correlation. People are playing which ones have growth, could outperform the S&P, and which one have a lower correlation to the market. That's really what they're investing, okay? This is not new. Now, let's go to just real quick now think of actually what Kevin talked about when he talked about software and he talked about cloud, okay? I would include the cybersecurity. Stocks in the cybersecurity which we can make mention of is CrowdStrike, right? Anyone else have a name in cybersecurity? Now, when we think of actually cybersecurity, CrowdStrike is probably going to be one of the top ones. Some might just buy the industry group itself, but what other stock might be in cybersecurity? Okay. Now, what I'm going to now do is I'm going to bring up the software name Microsoft, and there's a question on the ATR percentage. So let's kind of include this in our discussion. So if I were to look at this, and by the way, if we pulled up, let's say, Market Watch, Visualize, okay? Now, couple things kind of standing out. Now, obviously, in the technology space, there's your software. Now, excuse me, semiconductors. I do want to make mention of one thing. I know this, some of you might not enjoy this, some of you might enjoy it more. Do you realize that it was just what, like, and I'm talking about in the last, let's say, 7 days, okay? 8 days, a week and a half. Do you realize that Micron was at 653 and Micron current price is literally up to 957, up $300 in 18 days in a last week and a half? Last week and a half. Okay. Anyway, some people say, not that interesting. Others, more interesting. Okay. Now, let's go to Microsoft just real quick. Pull this up. And the reason why we brought this up is when you look at the Microsoft, it's right there. Now, there's other names like Oracle that's getting a push, Palantir, Salesforce, Adobe. These are all software. Okay. Salesforce, Adobe, Microsoft. You're going to see other names in here that's also kind of getting a little push, IBM and so on. Now, what I want to kind of do is I want to kind of show this Microsoft. And if we kind of said, where do we see support? How can we actually see where that support level is? And is there increasing odds of it bouncing up off support? Now, first off, when we look at the MACD, it's kind of giving us some indication that a support level probably was built. And number two is the chances that we could be going up are probably starting to increase. How could we see that? Well, number one is when we look down at the bottom on the MACD, and I'll kind of circle the lowest point on the MACD, and I'm going to go up to where the price is. And we actually see it right there. Now, the MACD is not meant to be a one-day indicator. It's meant to kind of show maybe the path over time of the trend. Now, if we look at the kind of the second spot where the MACD was down and then it rolled back to the upside, it was actually right there. That's the second time in a row that kind of 400 kind of was touched and we held the 400. Now, what do we see lately? The MACD was not as low as it was before. What does that tell you as an investor? Well, we know where we're going with this, right? If the MACD is not dropping as low as it was before, the negative momentum isn't as high as it was before, or as bad, I should say. Well, if the negative momentum isn't as bad as it was before, we could be starting to make some higher lows, or kind of getting maybe some double bottoms, triple bottoms, etc. In this case, when I go up to the price up before, notice the price did not have to go down as low as it did before. Why does the bullish investor care? Well, because they're trying to buy on a higher low. Two, if we're making a higher low, we could be also starting to get a higher high. That's why it matters. Now, third, why does it matter? Because you don't want to be a day late, dollar short. You understand that? You want to read that before the break happens. So if you start to say, hey, the MACD is not going down as much as it did before, you're looking for those setups. Now, if we said, well, show me where that entry was, or one of them recently, it's right there. Why is there green on the chart? It's to stamp it right on the forehead of like, James, call hold. Okay, now what's the purpose of the green lines on the moving average? Well, it's also telling us momentum is bullish and the trend is bullish. Now, James, show me that stamp again. Okay, anyway, sometimes we got to stamp it on our forehead a little bit and just say, oh yeah, it was right there. Now, that doesn't guarantee it's going to go up the very next day or that day, but it's showing us that's what it was showing even yesterday. Now, if we go forward to today, you're going to see that some of the thing that people don't talk about probably enough is gap. Okay, the price closed higher yesterday and it gaps up here today. What is that gap really telling us? Well, number one is people are buying last night in the last night evening hours. Number two, they were actually buying this morning before we officially opened at 9:30 a.m. Eastern. So that means there was buyers before the official market opened, and they were already knocking the price higher. So that way, when the market did open, the market price showed the gap in the price where it was trading in the extended hours. That's also something really important to understand, is that that extended hour trading could play into the very next day. The price opened up showing that, and we opened up at 433 and the price pushed up about another $10 from where we were this morning. Does it always actually hold? No, but it's usually not necessarily a bearish sign. Okay, now let's talk about the trade now. If we go back to this for just a second and said, where might we try to go to? Well, the path of least resistance, thinking the next level resistance. Now, if we're coming back to the upside, we're thinking about what was prior support or what was prior resistance. Now, if we take a look at this, okay, you're now going to notice on this chart, if we said what was prior support or prior resistance, well, the prior, and by the way, we could also include the gap downs. We had a low and you had a gap down. Here's where we were right there. That's where we're trying to slice through right now. Now, up above that, if we said where's prior support is probably right around 469. Okay. Now, there's a question on this in the chat. Okay. So someone asked the question, is it too late? Well, remember, if we said the comment like, quote, are we too late? There's two ways in which we try to answer that question. Number one is if we went to this candlestick, not candlestick, this little flask or flange, if you're a scientist, okay, beaker, if you will, we're going to go to edit studies. Now, one thing I want to do is I want to kind of see if I can't turn these on, okay? And let me actually see if there's actually a way to turn these on. And yeah, that's the one I want. I want shared bubbles right there, bubbles. Now, the bubbles, it's kind of a funny way to kind of show the timing, okay? So I'm going to show this again. How do we put this on? So let's go right back to the little beaker there. Let's go down to where it says bubbles. And what we're now going to do is just click on that little settings gear. When we do that right there, what it does is it says show bubbles. So what does the bubbles do? Well, it counts the number of days of the moving averages that have been green or red. This tells us something about the timing, okay? Now, let's go back. We'll put that there, apply, and I'll click on OK. Now, let's zoom back in. So what you're now going to notice is if we have the moving average, the 10-period moving average red, R for red, 1 for being 1 day, red 1 day, red 2 day, red 3 day. So if we kind of said, look, G for green moving average, which moving average? The 10. That day 1 is probably not late, okay? That's the first day you actually had the 10-period green. G2, green moving average for the second day is probably not too late, okay? If you're buying in the first 3 days of a bounce, you're probably still pretty close to support. That's one way we would kind of gauge, quote, is the investor potentially too late? Now, we could double check that by using the moving average envelopes. That second chart, when we kind of gauge this, the light blue line is your 10-day exponential moving average. Okay, some people might look at that and say that's potential support. Now, if you looked at where we were yesterday, we were not even at the yellow line. We weren't even at the yellow line. What does that tell us? Well, the movement in the candle, we're not even 3% above the 10-day exponential moving average. That's what the yellow line is showing. Today's price action, when it gapped up, oh yeah, we're too late. Too late? We're still not even at 3% above the 10-period moving average. This is how you stop yourself from getting like price gaps to the upside and you have nothing to measure it with. Even if we look at where it is now. So yellow, 3% above the 10-day exponential, red 5%, white 7, and that blue 10. The goal, if someone actually said, look, I bought it between the 10-day moving average and the yellow, some might grade that as an A entry. You got to get the stock somewhat to go up to get a potential bounce, right? That might be viewed as A, B, between the yellow and blue, C, between the red and the white, and you're getting into kind of like D to F, between the white and the blue. I'll just call it F, D. And if you bought something above the, let's say the blue, you might be borderline F if you were looking to buy. If you buy there, the risk is that you could mean revert and you could pull back down. There could be more people looking to sell above the blue than to potentially buy. Always know. But if you did that trade over time and you bought above the blue, you'd probably have a greater likelihood of statistically pulling back. Okay? All right, now. Yeah, exactly. Paul, so Paul, saying the same thing, Paul. Okay? I'm never going to argue with Paul, ever. Why would I do that? So here we go. We're going to go back to Microsoft, okay? So if we go back to the trade tab, let's go Microsoft. Let's pull this up, MSFT. Now, some of you, how many of you, if I asked you, how many of you like to trade stocks only, or how many of you like to trade stocks and options? Type that in the chat so I kind of know who I'm talking to. Now, if the investor said, James, I kind of like to sell puts. I like to try to, for example, take a bullish direction, okay? A bullish option strategy is example given selling a put. That's one way you could do it. Second, someone might say, James, I like to also kind of have that second characteristic or potential of time decay, selling an option, time decay. Volatility. Now, if the stock actually goes up, the volatility could go down. If the volatility goes down and you sold the option already, the puts could decrease in value if the volatility were to contract, okay? Now, the opposite of that would be if price goes down, it could hurt the position. If volatility actually goes up, it could hurt that position. So there's the opposite. Now, what we're going to do in this trade example is we're going to go look to sell the 430. Now, wait. If you sell the 430, what are you doing? Well, if you sell the 430, you're thinking the price could stay up above that price level. Now, on a higher price dollar stock, and I gave the example a couple months ago, if the stock is greater than 300, many investors might say, I'm going to do a short put vertical than a cash secured put. Why? Well, because if you sell a put, it's the obligation to buy the shares at 430. How many shares? The answer is 100. So you got to ask yourself the question, do you have $43,000 to buy 100 shares of stock at 430? This is why some investors might say, James, I want to have the downside protection, the protection being closer to what we're selling the put strike for. If we did the 430, 425, a short put spread, and the credit there being, let's say, $1.70. $1.70, okay? $1.70 credit, dollars max profit, 330 max loss, $5 spread width. That's where the numbers are coming in. If we're actually getting $1.70 credit, we're obligated to buy the shares at 430. That's why we're getting the break even to be at 428.30. And we're talking about the break even at expiration, not today. Okay. Now notice that commission right there, $1.30. So when we're talking about technical analysis, advanced charting, some of this advanced charting can actually, so advanced charting is not necessarily always looking at all these different indicators. It's actually about understanding what you're reading. That'd be helpful. Now, part of that is actually, it doesn't necessarily always have to be a stock trade. It also might be, let's say you're trying to use options as a way to kind of play or invest in that technical analysis on the chart. So now what we're going to do is we're going to go ahead and send that order right there. Now, the comment from Ecoscaper is Microsoft looks like an inverse head and shoulders. Sometimes when you get some of these reversals, yeah, you could actually say that a little bit. It's kind of not perfect, but most things aren't. You're going to kind of see that there's the shoulder. There's the melon if you're in the South. You know what I mean. If you're in the north, you don't know what we mean. And you're going to kind of see the right-hand shoulder. Now, let's kind of take that comment by Ecoscaper, okay? Now, I'll go back to the duration of time that we just did in just a sec. If we use this as a neckline, okay? If we use this as a neckline and kind of said, look, from the 360 up to the, kind of said, what's the distance there? We got about 430, okay, being the neckline, if you will. The bottom of the head, 360, okay? So we're talking about $70. $70, if we did that, is going to put us right there if it went the expected target. Now, here's the comment, okay? Today, I mean, this is like the saddest day ever, okay? The paper money account. So what's the bad part? Okay, I'll tell you the bad part. Example given. What's the bad part about these options? Okay, example given. There was a position here today of Dell. Okay, and Dell was your classic short put vertical, and it was really $5 wide. Now, the problem with this trade is why you say, yeah, you know, I made $193. Why do people trade stocks? Well, it's an easy answer. The stock went up $92 today, and the investor made a fraction, and not only was it at a fraction amount, it was a capped amount. Now, if you ever had a picture in the dictionary of remorse, okay, and just pain and regret, the picture of this trade of Dell would probably be in the dictionary, because you got the stock right, but you chose a strategy, number one, that was capped, okay, meaning there was a max gain built in, and this $93 move, the investor, they were right on the position, they got the right stock, but the strategy did not capture that upside potential. Now, why do I bring that up? Because one of the comments was, hey, maybe given the expected move, is that maybe a good strategy if you're expecting a higher move? Well, now here's the thing. Do we think that every stock's going to get a 30%, 40% pop from yesterday to this morning? Probably not. If you do trade an option, you might have to be more active in rolling the position if you think there's more upside. You might even say, look, I'm going to kind of position size a stock position, build the position over time to try to take advantage of that move. And that's exactly right. Tech One Trade says it could have gone wrong, could have gone wrong too. That's a fair comment. But can you let me for one time just have some remorse and some just regret and pain? Okay, so Tech Trades, you're trying to make me feel better, but I don't. Okay, all right, here we go. Now, I want to actually go back to just a couple of these other names, okay? When you look at a stock like Salesforce, you're kind of seeing now let's go back to this chart just really quick. And the chart that I want to go back to, and again, we want to focus a little bit on price action and the MACD. Now, I'm going to bring this back up. So let me just kind of show this. Now, again, the bubbles, they're interesting because it kind of helps us kind of gauge the timing. Now, we can honestly say, well, James, if you want to gauge the timing, you could also just say, well, like, and again, when it says G, we're talking about G for green. One is actually telling us the number of days the moving average has been green. Well, we can see that, okay? Now, the big actually thing is when you take a look at this, notice on this, again, we're focusing on the MACD. Notice when the price actually went up right there and then fell back down, the MACD stayed above zero. Notice how the MACD actually stayed above the zero line. You're going to now notice that it kind of went up again price-wise. Price fell back down. What did actually the MACD do? It did not go below zero. Now, if you're someone that says, look, I like to trade stocks that are kind of creating W patterns, a basis support, and so on that might bounce, that is probably one of the top patterns that you're looking for on the price, okay? And on the oscillator, the MACD. Now, if you take a look at this, what we're going to notice is this green dot right here is going to show intraday. It's not just at the end of the day. So that green dot, trade above the high of the low day as well. Tall hold, okay? So this could have even been something you said, James, I noticed that. And by the way, you're now thinking, well, that implies that I'm actually looking at this chart. No, it doesn't. Because if you went to, let me pull this back up. If you went to this chart, it's going to show, if you had a list of Dow stocks, it would show us which stocks in the Dow that would actually be showing, that's why it says tall hold, okay, or caw hold. The stocks with the green background, if this was a stock list, one with the green background is saying it's meeting the criteria. Scripts are not guaranteed for accuracy of timing. You want to verify that, okay? So if I pulled up, now by the way, it doesn't matter if it's an index list, a sector list, it could be a list of Dow stocks. We do not have to be looking at each individual one. That's the purpose of that column heading. If you went to my X page, you'll see those scripts right at the very top of my page. So if we pull up the Dow Jones and said, hey, Dow Jones, which stocks are actually showing that? From the ones that I've loaded so far, Microsoft, right there. You're also going to see NVIDIA right there, and you're going to see BA, okay? Now, speaking of, let's say NVIDIA, okay? I just want, so first of all, does having the bubbles help you gauge the timing? Now, here's the thing I don't like. James, what do you don't like? People make it too hard, okay? So there's been 3 tools that we've actually tried to make helpful. Number one is the changing of the color from the moving average being from red to green. Okay, so that's number one. If we wanted to gauge the timing, the bubbles, they're counting the number of days now. Anything probably less than 3, the timing is probably pretty good, okay? Now, the second way to kind of gauge that timing, which we said, is those moving average envelopes, okay? And I went over that. Outside that, I think we just beaten this to death here, okay? We don't need more indicators than that. That's really telling us 95%, 99% of probably everything we probably need to know, okay? Now, I'm going to go back to this in 2 minutes. I'm going to do this last example. Now, one of the stocks that's kind of showing this. Now, some people might say, well, James, we don't actually have a green line on the moving average yet. Now, James, do some investors use or maybe try to get in when the moving averages have not changed color yet? Oh, yes. Okay. There's some of us that we know we buy based upon price. Okay. Now, we've heard of the old example, old high being new potential support. Now, one of the trades that I'm going to end on here is we had an old high for the most part right around the 214-ish area. Then we actually went up to the brand new high right around 236. Now, the old high-ish area might turn into the new low-ish area. Now, some investors, the con about this is if you buy and you don't have the moving average turning yet or changing color, it might be a little early. Nobody says you can't do dollar cost averaging. So what we're going to start to actually do is build a position. We're going to go buy custom with the OCO bracket. Now, what I'm going to do on this is, let's say we start to build like a position and say, look, we're going to try to buy some of these shares at the current price level of 216-ish. We're going to set a target right around about, let's say, 234-ish, okay? Now, this is kind of upon the practice of old high being new potential low. 234 was the prior high. Where's the low? Some of these recent areas that we actually went to is right around 210. And if we look to wrap this up, it's going to be less 2%, 205.80. Now, you know where we're going with this. If on Monday, okay, 205.80, if we start to get a green line on that shorter term moving average, an investor might say, James, I'm going to look to add to the position. If we actually get the 20 period moving average line then turning again from red to green, they might say, look, I'm trying to add to the position. So this is something I want us to watch going into next week. Now, I won't be here. I'll be in Hawaii. Now, in Hawaii, do they have Wi-Fi? I'm sure they do. Do they have the internet? I'm sure they do. We don't have to be on a computer. We can even be on an iPad, etc. So the biggest actually thing is going into next week, keep an eye on some of these software names, but we will also include NVIDIA on this, how it's pulled back and even after earnings, here it is. I'm out of my time here. Stay tuned for Brent Morris coming up next with advanced option discussion. And I want to say thanks to Kevin Horder for answering those questions in chat. Okay. Now we'll finish this, and 2/3 of our examples today were really stock examples. I know many of you like kind of talking about stocks because that might be where you are, but just also understand we can use advanced charting to also practice using option trades like we did on Microsoft as well. So I'm also out of my time here, and I want to kind of make mention, if you have not subscribed to the Trader Talk channel, do so. It's free. That way you can get our content on there. Also, quick reminder that with what we discussed, it was done for example, illustrative purposes only. And this has been the class on advanced charting techniques with a focus on reading the MACD as far as divergences and the fact that it's failing to fall below the zero line and it's holding momentum. And so that's very important because many of the stocks that we've actually seen that have gone to the upside have had that specific pattern. I want to help you read that here today. So with that said, stay tuned for Brent Morris coming up next. Again, have a great weekend, and take care. Bye-bye.